Hello everyone, wanted to share the small video what is consolidation and retracement in the live market. Just explaining you this on the chart here. Imagine this is a price of stock which is going up. So whenever it will go up and then take a pullback, go up, take a pullback, go up, take a pullback. So these pullbacks, this one, this one, this one, these pullbacks are called retracement. They are called retracement. Why they are important? See, whenever there is a trend happening in the market, let's say this is a trend which has started. A lot of time, because of multiple reasons, people miss the trend and they are not able to take the trade here. So whenever you get to know that this is a trend which has started, instead of taking a trade somewhere here, somewhere here, somewhere here, you can actually wait for the pullback, wait for the retracement to happen and take trade somewhere here or somewhere here. So this is the region you can actually take a trade. This is the region you can actually take a trade. So instead of taking this value, you will be taking this value. And retracement is an indication that market is taking a small pullback and then starting its journey further. Very important point to know. A lot of people know this, but there are people who don't know this. So retracement, very important. There is another topic, consolidation. So what is consolidation? Imagine the price is going up, taking a pullback, going up, taking a pullback, which is retracement. And after reaching to this point, market is facing resistance. There is some resistance which is happening. So it will not go up. At the same time, it is facing some support also. So there is support and resistance in this region. So what market will do, the price will start behaving like this, up, down, up, down, up, down. A lot of people call this range bound market, flat day. This is a consolidation happening for the price. So the market will not go up or down. It is actually staying in this region only. So why it is important? It is important because after such consolidation, breakout happens. Breakout can happen in any side. It can go down, market can go down, or market can go up. So what and why a consolidation is important? See, number one, you know the market is flat and it is not going anywhere, but you have another data also that it will going to break somewhere. So you can actually plan your trades accordingly. And there are a lot of indicators also, the advanced indicators. I'm not talking about lagging indicators, with which you can actually identify where the market is going, taking support and resistance into consideration. So this is called consolidation. This is called retracement. Very important points in trading. When you are in the live market and you are actually trading this and this, they are regular feature of trading, and they come up. So if you already know about them, what to do with them, you can actually play your cards very well. Thank you guys. Let me show you one example of retracement happening in the live market. See, I have taken this chart here. The market was going up and then it came down. So the retracement happened here. It started going up again, and then again this pullback retracement happened. Then it started going up again, and then retracement. Market went up again, then retracement. So usually what happens, a lot of time, there are a lot of traders who actually take trade somewhere here and they enjoy this run, and then when market started taking a retracement, they think market is now coming down and they leave the trade. way early and look at the market where it is going. Some people leave here, some people leave here, some people leave here, so they're not able to take the full bull run. You have to understand, market will never go up like this. It will go up, take a retracement, go up, take a retracement, go up, take a retracement. So whenever you have to understand this concept, this retracement is very important. Whenever some bull run is happening, you must take the full journey, enjoy the full profit which is coming. Don't leave it midway or just take 10% or 20%. This is how the big money is made in the stock market.